All right, so a couple housekeeping things. Welcome to the 2028 internal case competition. I'll be timekeeping for you guys. Make sure your phones are off. Presentation will be 10 minutes. So I will hold a green card at 5 minutes, signaling you have 5 minutes remaining. I'll hold a yellow card at 7 minutes, signaling you have 3 minutes remaining. And then finally, I'll hold a red card at 9 minutes. So you have 1 minute remaining at that point. At 10 minutes, I'll just bang on the desk and cut the presentation off. Following the presentation, there'll be a 5-minute Q&A. And then I'll notify the judges when it's time to ask the last question. And you may begin when you are ready.
Good afternoon, gentlemen. In the words of the late Robert Frost, we stand at a path with multiple directions diverged in a wood. With different pathways consulting, taking the path least traveled will make all the difference. Now, with Spruceland, we identified 3 pillars of strength. The first being the locally grown investments, the second being the diverse range of businesses in the area, and the third and most important, the high community involvement and focus. Unfortunately, we did identify a problem, that Spruceland is in the midst of an identity crisis, in the midst of an oil and gas downturn. Now, how do we move forward, keep the community involved, and how do we figure out who you are while maintaining your vision?
So, in order to determine the best path forward, we did a variety of analysis. If we look here, we can see that your strengths include the large amount of liquid assets currently available. Our community involvement has made us very strong in the past as well. However, there is a weakness as the oil and gas industry is losing its value. Within opportunities, we see that lower interest rates in the retail or in the real estate industry mean that it is a buyer's market, which we are perfectly poised to leverage. Additionally, we also have a young population in the northern region. There is the threat of the oil and gas industry leaving, and there is a declining indigenous and youth population as well. Now looking here, we can see that politically, the recent provincial government has increased the amount of new business loans available. Economically, as mentioned, the real estate market is in a better position for buyers. Now socially, in the past, keeping the local community involved has been what has made us very strong, and we believe can keep us very strong moving forward in the future. Technologically, there isn't too much, but there is perhaps a few assets available here and there that can help us with our new path. If we look at our 5 forces, we can see immediately that the one that stands out is our customers. If we don't have that strong customer buy-in within the community, any path we choose is going to be ultimately a waste of time and money.
We also highlighted a couple growth rates for you as well too. Taking a look here at these few little highlights, you can see year-over-year change, it's all positive inflections. Taking a look at your biggest number, revenue for investment properties, is actually quite stable, so it really makes it kind of keep that number on track. All the numbers are completely positive moving forward, but there's a big jump on gain on investment properties. We also highlighted a couple ratios for you as well too. Taking a look at your debt ratio, current ratio, debt to equity ratio, all these are pretty good compared to industry standards, but I'm not here just to tell you how good you guys are doing. We also have a couple key success factors we highlighted as well too. Workforce, you guys got it. Finance, you have it as well. And of course, all your physical assets. The big question is, how will you use what you already have?
Now, in identifying solutions, we had a 3-tier decision criteria. The first being the community involvement, the second being the workforce involvement, and the third and most important, the stable local economic cycles. We came up with 3 alternatives. The first being sell off stocks and assets, which is a historic trend in Alberta when oil and gas is in a downturn. The unfortunate part is we will not realize our full value of stock and assets achieved, but we will have an immediate profit, unfortunately lower. On the other hand, we could change the whole organization into a publicly listed company. It will increase inbound capital and increase share prices. The other side, where we will not have community shareholdership on the board any longer, but it is possible to realize profit before community. And the third, expand into retail and commercial real estate. Not only will it increase overall revenue, resource companies will have a more convenient operational head office, And third, there will be different job requirements for the local workforce that's hungry.
Now let's return to our decision criteria as we look at which path is best. So, if we look at selling off stocks, we can see that there is a community involvement, as those community shareholders do realize some of the value. However, there's no more workforce involvement as we're no longer employing people in the region. Additionally, we don't gain access to those stable cycles as we're no longer actually functioning as a company. If we look at publicly trading, community involvement is going to be lower because we now have that outside influence of outside shareholders. However, we do continue to have workforce involvement as we continue to employ the people. It is unlikely, though, that we will gain access to stable economic cycles as we'll likely remain in the volatile oil and gas cycles. Looking at community real estate, we can see that community involvement will remain high as we're going to continue to invest in and develop the local community. Workforce involvement is also going to be high as we will continue to employ these people and pay them money. We will also gain access to those stable local economic cycles and diversify away from the more volatile oil and gas cycles. That's what we've chosen path 3. We recommend that we continue to build more offices for the northern region so we can move those operational headquarters out of Calgary and Edmonton and up into the northern region where their costs will be lower. Additionally, we're going to expand to different retail models such as strip malls where we can bring in local communities, local businesses, and outside businesses that will pay lease the locations, and that will increase revenue as well. Both of these points will also create all levels of involvement for the workforce. We're going to be employing those currently unemployed skilled tradespeople in the development of these new real estate properties and be providing opportunities to the currently undereducated people within the region by providing them with entry-level jobs.
With this path, of course, there is a couple of risks we'd like to migrate as well too. This will create different workload for the resource miners initially. They go from working outdoors to maybe a different path at the very beginning. With different offices moving in, there is going to be a higher outside corporate influence within the community. With that being said, there is a possibility of a diluted community ownership as well too. We did, however, figure out a couple new updated pillars of strengths. With the new updated pillars of strengths, you're going to keep the community involved as shareholders. New businesses do move in, both retail and operational, give a different taste to the vision that we're providing in the community. As well, with the local workforce, there are leadership and consulting positions available in case they wanted to move a little higher up within the company as well. Implementation, we're estimating the whole thing should take about 9 to 12 months altogether. With the first couple steps, expanding the current office space, taking what you have, expanding it, building more offices, getting a little more infrastructure in the local community. Use that additional cash flow to also build more retail space, having more entry-level positions open, different offices in there, lots of cool stuff happening. After that's all finished, we actually think that we should build a local community center for the local residents while still realizing a profit. Give back to the community that gave so much back to you. Do we have any questions?
Are we supposed to ask questions now?
Yeah, I'll start the timer as soon as you guys ask the first question.
Oh, okay.
I'll jump in with the first one. Thanks very much, by the way. In your SWOT analysis, you put, I believe, shareholders under your weaknesses. I was just wondering if you could speak more to that.
So with shareholders under weaknesses, what we're kind of talking about is that there's a slight thing between a bit of a gap between the asset value and the market value of the company, the shares and so on. It's a bit of a complex topic because part of the way to possibly remedy that would be to conduct evaluations and set the stock price. However, there is the possibility that if you do that, stocks will no longer trade hands because people won't want to buy them at those prices, which means it isn't worth that price. It's a bit of a byproduct of Spruceland's very unique model. So it's something that should be looked at and we think we're fixing. But it's a little something you want to bring on like an outside financial advisor for probably.
So looking at the implementation of expanding to real estate, I don't see anywhere how you're going to fund that.
Well, if you take a look at the numbers, there is actually quite a bit of cash flow compared to some other companies that are operating out there. So there's a lot of liquid assets available, as well as once you start expanding into retail, more assets are flowing out, more revenue is going to be coming in. So the company as it is can fund things pretty well. And then there's going to be more money coming in as well too.
Okay. So with that being said, though, does it really give you a forecast of how much you can buy with the existing books, the company?
Well, it all depends, because right now we're in a downturn, which historically in Alberta makes a buyer's market for real estate. And as we know at this time, the interest rates are at all-time record lows. So of course, we would need to gain capital and take out loans, but we already have a solid base. So it would come down to a pure numbers game. And instead of centering around the Edmonton-Calgary region, like Spruceland had done previously, moving up into that northern region, we're looking at smaller prices and increased revenues. So we would not be realizing a high price for these retails compared to Edmonton and Calgary.
So have you done any analysis to understand, like, you know, the last downturn, prices around 2008 or 9, you know, what did that impact as far as customers for your retail or commercial? Was there still people, if you build the assets, will people be moving into them?
Great question. When it comes to 2008, 2009, the downturn was different because the real estate market had dropped. It wasn't so much oil and gas, although they went hand in hand. This one is just solely oil and gas, so our real estate market's still healthy. Whether it's a good time or a bad time, people still like to consume. Unfortunately, in these regions, they don't have things like Amazon one-day delivery. Within a 100-kilometer radius, they're driving 3 hours to Grand Prairie or Edmonton for these retail purposes. So what we want to do is focus on that northern hub and create a new center for them. Not only cut their costs, keep their revenue in that community stable economic cycle.
You know, they say every cycle is different. Who knows what the next one will bring?
So one of the problems identified was the fact that their share price is undervalued at about $22. How should we solve that?
It's tough to say. That's very much not quite our level of expertise in the closing gaps like that. However, we think that continuing to put that money into that community might perhaps see them willing to pay higher prices for the stocks. Because currently the trading happens between community members. So perhaps the low stock prices are indicative of the amount of money that they have to pay for these stocks. If we increase the revenue into the community, we might possibly see them willing to pay a higher price for these stocks, perhaps closing that gap a little bit more.
So one more question.